Okay, it's the 30th of September 2024. It's the last day of the month for the trading month. Um, and we are about 25 minutes prior to New York Open. So let's get to the charts and do our analysis as usual and see what opportunities we may have during the New York session today. Okay, so this is the daily time frame. Price is pushing down. We have rejected around 268, 2682, 2683, 2684, that area 2684. We've rejected 2684. We also have created some sort of daily, weekly resistance at around 2672, and we are pushing down. Right, we've broken the previous daily low, and we are pushing down. If we close below 2650 today, then we could continue down to 2620 probably. Okay. But as I've said this several times, the daily time frame, the monthly, weekly, daily time frames are not important to me because I trade just the first 2 to 3 hours of the New York Open. So what happens on these high time frames actually mean nothing to me. I'm just looking for a move from an H4 zone, right? If you've seen my past videos, you've probably seen how I mark these H4 zones, and that's what we're going to do now. Before we get to that, I'm going to very quickly bring up the purpose of these streams. Okay, so this is the purpose basically of these streams, right? To learn to draw supply demand zones correctly, to identify high liquidity zones or HLZ to trade from. Okay, to identify a high liquidity zone to trade from, to learn to draw support and resistance levels correctly, and to learn to manage risk when your trade goes against you, when your trade goes in drawdown, right? If you learn these four things will automatically lead to one of these two things. And these two things are the right result that you should be as a trader aiming for, right? As a trader, as a new trader, or as a professional trader, as a trader who's seeking consistent profitability in trading, this should be your aim, the right result. And the right result can be a win or it can be a loss, right? And if you do these top three things right, you will end up with a win, if you have a win, then that win will be a low risk, high reward, high probability trade. If you end up with a loss and you do this right, the last one right, you'll end up with a loss that is smaller than your planned loss. Okay, you will lose less than your planned loss. This is the purpose of these streams. The right action that will lead to the right result. That's it. That's the only purpose. This stream is not meant to show you what my gains are and how much money I make and how great I am as a trader. That's not the purpose of this. I'm not trying to, I'm not chasing any gains. I'm not trying to double my account. I'm not trying to do any of that in the streams. I'm just trying to drive these 4 points home that will lead to either one of these two results. Okay. All right. Having said that, let's get to our trading chart. Let's go to the H4 time frame like we usually do. This is before I get to the H4 time frame, I just want to, if you watched Friday's stream, these are the zones that we had marked on Friday. I just want to kind of show you guys what happened. So we had marked this price, unfortunately didn't come here. We had a pending order at 2671.89. We also had a pending order at 2673.12 with a stop loss of about 25 pips stop loss on the first and about 12 pips, 11, 12 pips on the second one. The price didn't come to either of them. It tried, but it failed, and it just dropped. It dropped straight through those demand zones that we had marked, dropped straight through them, broke those resistance levels, the support levels that we had marked, it closed below them and kept closing below them, and then it continued down, pushed all the way down throughout the first 3.5 hours of first 4 hours of the NY after the NY open, and it never came back, right? Then later in the day, it did come back. Um, it did start to come back, and today, when the market opened, it came back perfectly to this fib level. Again, part of this candle that we're drawing, this fib level is a part of this candle, M15 candle. This candle is a liquidity grab from this light red area. So I'll just zoom out for you guys. This light red area is that candle. We had marked that, and it touched it to the pip, and that's when we had that liquidity grab, and that's why we drew the fib here. If you watch Friday's stream, it's all very, very clear. It's non-subjective, and it's completely clear why we drew the fib the way we have drawn it here. And price did come, touched in the Asian session, it touched here, and it dropped another to almost 300 pips, right? So in total, that move from around there was about, I think, 350, yeah, about 350 pips, right? So let's get rid of these, and let's start with a clean chart and do an analysis again. The purpose of doing these, drawing these zones, supply demand zones, the purpose of identifying high liquidity zones over and over again on the streams is so that you guys learn how I do it, right? And if it is helpful, then if you think it's helpful to your style of trading or to your trade plan, then learn how I do it, and then you can learn, you can watch these videos and learn how I do it, and then you can learn to do it yourself. Okay, right. So let's put these levels as well. We've got um, 2620, a weekly support level or a daily support level around there, roughly. For that, we had bullish candles move through it, but price kind of paused there. So that's why we have nothing on the left here. So we've got absolutely nothing on the left, right? But price did pause there, so we have 2620 and 2672. So we're going to put those two levels, 2620, 2672, and 2620. Okay, and underneath that we have 2682, 2686, sorry, 2686, and under that is 2559, 2558. Okay, 58, 2530. Okay, right. Now let's draw our zones. So there's a zone here, there's a rally, a base, and a drop. Okay, so that's the first one. That's the rally. Those are two base in candles, and that's a drop, right? Leg in, base, two base in candles, leg out. Okay, so that's the first. Then above that, we've got this. We've got a rally. That's a base in candle. 1, 2, 3, 4, 5 base in candles. So let's extend that all the way there. And that comes all the way there. Okay. Now we've already tapped this zone. So a leg in, 5 base in candles. 1, 2, 3, 4, 5, and a leg out. Clean drop down. Okay. And that is about 300 pips away from price. Okay, so let's leave those two for now, and let's fine tune them, or let's refine them if needed later. Okay, now let's look for demand. Here we got demand here, which is a part of this. It's a part of this entire this rally, and yeah. So that's a rally, and that's a base. 1, 2, 3, 4, 5, 6 base in candles, and then the leg out. Okay. So rally, base, rally. Okay. I hope that's clear. That's a leg in, 1, 2, 3, 4, 5, 6 base in candles and a leg out. Okay, these are all majority of these candles that cover this base have more wick than body, right? That has more wick than body, that has more wick than body, that has more wick than body, and that has more wick than body. So that candle falls in between them, and that has a little less wick and more body, but that's okay. That's all part of the same base, right? If you do start to practice these, if you do start drawing these, practicing them, you will start getting them quite accurately. You'll be quite accurate with them, okay? And you can see how price is already reacting to it, where it's a pre-NY session right now. You can see price has touched it and already moved up about 60-70 pips, okay? Further down, we'll have to probably come a little further down as well. There is a drop and a rally there, so mark that as well, right? So that rally, there is a rally here and 2 base in candles and a rally, but then price cut through that, so it dropped through and then it rallied up straight away. So there should be an H1 base in candle right there. We're going to leave that for now. We're not going to get, we'll kind of refine it later. And here there is a rally and a base, a single base in candle and a rally. Okay. Now let's go put down the digits for these. So that's basically roughly what we have for the New York session. Okay, now let's clean it up if needed. So let's do this. Let's do this first. The close is 668 and 270. 668, 270. Then here we're gonna go down to the H1 to see if we have a. Yeah, we have a base there. We do have a base there, but you also have a base here. So I'm gonna capture that base. Okay, I'm gonna get that because that's a rally, a base, and a rally. Okay, rally, a base in candle, and then the move up, which consists of 3 candles. This is already tapped it, but it's still the move up. Okay, so the open there is 164 and 392. Okay, cool. Now here we've got 554 and 268. 268. Right, this high is 604. The price has already come into that, so here high 793. High 604. So price is already tapped into that, so I'm going to put it just a little higher because price is already tapped. So that's the area of that supply zone that is already that's left. So if I had it here as I had it below, that area has been tapped into. but this area of that supply zone has not been tapped into yet. So we still have supply there. So we're going to leave the box above this. Yeah, I hope that's clear. We had it here, right? We had it like this. Okay, we had it here, but price has tapped into this supply, rally, base, 1, 2, 3, 4, 5 base in candles and drop. Price has tapped into it. So we're gonna, that's the bit of the candle that's the bit of the supply that is left, or it's left. It's not been touched yet. 604. Just higher so that we can see it. Okay, clear, right? So that's H4 supply, that's H4 demand. Now we're going to see which of these are high liquidity zones and which are not. So this zone took out this demand, right? There was demand right here. If you see this demand, there was demand right here. Okay, there was demand right here. If you look on the H1 as well, you'll see, I think we had marked this on Friday, price broke right through it from there. So this becomes a high liquidity zone. Okay, it's obvious on the H4. We don't really need to go down to the H1. It's pretty obvious on the H4 that that's the drop and that's the rally. There is no basin candle on the H4, but on the H1 there is. So if you draw it like this, or if you draw it based on the H1, you still have demand there, and price broke right through it. And this was the reason price pulled up, and then decided to break through. So that is a high liquidity zone. Okay, so we mark that as high liquidity zone. Then we check the one above. This one broke this demand, right? This ugly, sorry, this really ugly demand here, all of that clear on the H1. Yeah, so all of that. Okay, again we had this marked on Friday. We have a drop and a rally here, right? The base you will find on the M30. If you go down to the M30, you'll find the base. That's the base, right there. So that's the base, right? And this move broke right through it. So that too becomes a high liquidity zone. Okay, so that becomes a high liquidity zone. So if you look on the H4 again, there is demand there. There is demand there because there's a rally. This is a leg in, and all of these are base in candles. And then there is a push up, right? From about here, there is a push up that went all the way up here. From here onwards, there is a push up that went all the way up here. These are all base in candles. It's really ugly. The leg out is very ugly on the H4, or the rally and the base and the rally here is ugly on the H4. But if you go down to the H1, it's fairly obvious, right? You can see the rally here. You can see the move up. It's a lot more obvious on the, it's about a 320 pip rally on the H1, right? So we have demand there. So the demand was broken by this push down, and this push down, the supply is here, right? This is the supply that caused this push down. So we're going to mark that as a high liquidity zone. Okay, I think that's clear. Now, is this a high liquidity zone in demand? What did this take out anything to the left? There's nothing here on the left. This is all-time high, so there's nothing here on the left. So we're going to go down to the H1 and see if it is taken down. Well, yes, it did. There is H1 supply there. On the H4, there is also a high there. I think somewhere last week, maybe Wednesday or Tuesday last week, we had marked this. If you look back on Tuesday's stream, you should see that we had marked supply here. So this move was taken out. This move took out that supply. That supply was taken out by this move, right? So if you go down to the H1, it's a lot more clearer. That supply rally, a single basin candle and a drop, and this move took it out. So this too is a high liquidity zone. right? Now we got to see if the one below is a high liquidity zone. Here, okay? Did this take out anything on the left? Let's go down to the H1 and check. Yeah, so this move took out this supply. There was supply right here, right? There was supply right here, and this move took out that. So this too is a high liquidity zone. This is all I do every day, 25 minutes prior to NY open. This is the process that I follow. Is this a high liquidity zone, the one below? Did it take out anything on the left? We're going to go down to the, it's not clear on the H4. There is nothing because it's at all-time highs here, so we can't see anything on the H4. So it's not visible on the H4, right? Whether it's taken anything on the left or not. So we're going to go down to the H1 and see if it has taken out something. This move up took out that supply. So we had supply here, right? I hope that's clear. We have a rally, we have two basin candles, and we have a drop. And this move took out this supply, right? This move that started here, it came down, dipped, took it out. So this becomes a high liquidity zone, right? Right, so that's what we've got. Okay. All right. Can we just post this on the group very quickly? Yeah, we've got 2 minutes for NY open. So on the daily, also we did create resistance here. 2672. Yeah, we've already got that mark there. 2672. Okay. Right. Okay, so we closed below 2672, the previous daily, and current daily has broken below the previous daily low, and price is kind of pushing down towards this area. Now bear in mind, we've already moved about 320 pips today, that is the current, that is roughly, we've gone beyond the current ADR, the average daily range. The average daily range of the last three candles is about 275 pips. We've gone beyond that by over 15%, right? So that's why this is turned red, and we made about 315 pips right now. This is not too important. I'm just giving out some additional information. I don't use this as a part of my trading at all. Um, but just to let you know, we've already moved 315 pips today. Okay, just keep that in mind. Today is the last day of the month. Okay, so I don't know how much volume there is today, or is it going to be a pullback today? We don't know, right? Uh, okay, right. So um, right. So it's about 4 minutes since NY is open. We're going to wait to see how price reacts to this area. If price pulls back further, we're going to relook. We're going to look at this zone in more detail. Um, but before that, just want to quickly look at the monthly time frame. So the monthly time frame, we should close very bullish, right? Price is not going to push down another 1,397 pips and close bearish. That's not going to happen today in the next 8.5 hours. So price is going to close a strong bullish monthly candle, and then the weekly candle has just opened. So we may just be seeing a kind of a pullback right now to probably maybe kind of this kind of area, right? To 2586, 2584, 2582, around that area, to probably continue higher. So if you do look at the monthly, then that could be a bottom wick that the monthly is trying to create before it continues higher. That's possible on a higher time frame. Not important for session trading, not at all important for session trading, right? Now we're going to take a closer look at this area and see what really happened here. So we had a rally and a base and a rally, and this 4-hour candle was in the New York session, right? Open in the New York session. So let's take a closer look at it. On the H1 time frame, we have a move up. We had a liquidity grab, right? And then price came to that level and pushed up. Uh, let's look at the 30-minute time frame. Yeah, we had a liquidity grab there. Price went up, came back to that wick, and then pushed up. Okay. Um, So price has already come to that wick. Now, if price hadn't come to that wick, I would have marked that area, that candle. I would have marked that candle, and that candle is about a 70 pip candle. I would have marked it and see how price comes back and reacts to it. But this has already happened. We had the price came down. We grabbed liquidity. That's a liquidity wick, right? See, that wick is, let me zoom in so you guys can see. Um, that wick is different to most of the other wicks. All these wicks, if you look at the last 4 or 5 candles prior to that, that wick is different. And if you look at the last 4 or 5 candles after that, that wick is different, right? So that's a liquidity grab. That's almost a 50 pip wick. And price moved up, right? Since then, it moved up since the open about 86 pips, came back to that wick, respected the low of that candle, and then went up, right? So this was the start of that big move up. It's about a 625 pip move up, started off that candle. Now, if price hadn't come back and grabbed liquidity from that candle, I would have marked that candle for the New York session today, and I would have waited till price gets there to look for an opportunity to take a trade. But price already did that before it went up. It came there, grabbed liquidity, and went up. So we're going to look at the M15 candle, M15 time frame. Yeah, it's not really visible on the M15. We don't have anything. We have this candle, right? So maybe it's worth marking this candle. That's a tighter candle. That's about a 38 pip candle. That's fine. We are about 140 pips away from that candle. But nevertheless, I'm gonna mark that candle out. Let me look on the 5-minute time frame what it looked like. Yeah, it looks nice on the 5-minute as well. That's a grab of liquidity from that previous zone. That candle grab liquidity. So mark it on the M15. Yeah, we're gonna mark that full candle on the M30. Okay, I'm gonna mark that full candle. So the high of that is 2906. And the low of that is 356. 2906, 356. Okay, so the high 906, right? Perfect. Okay, we're going to watch that area. We're going to watch that space, see what happens. Price is about 120 pips, 25 pips away from it right now, so we're going to watch that space. Yeah, it gets that full candle plus this. That's fine. That's fine. We're going to just watch that area. It's about a 50 pip area. We're going to watch that area today. Lower. Let's see if there is anything lower. Nothing on the M30. Nothing on the 4. Well, that wick is there, and that's right at 2620. A daily SR area or a weekly support level. This candle here. Okay, this candle here. Grab liquidity from this zone, this candle. So maybe you can pay attention to that candle as well. That's on the H4, on the H1. There's nothing on the M30. The time frames that I'm interested in seeing a liquidity grab is the M15 and the M30, not so much the H1. Not really. Yeah, see that grab liquidity and went up. Yeah, but didn't come down. This candle. This candle. This candle is important. Yeah, it's the start of the move up. On the 15-minute, this candle is much larger than the previous candles. It's the start of the move up. I'm going to kind of pay attention to that candle as well. The high is 948 and the low is 639. 948, 639. Okay. Yeah, it's about a 29 pip zone. That's fine. Right. So we're going to just watch these two areas. If price comes into it today, we're going to just pay attention. In terms of supply, let's have a look at supply as well. So we had uh, a rally, two basing candles, and a drop. Um, this candle has an hour 45 minutes to close. It has no top wick, so it's very likely price is going to push up and create a top wick either in this current candle or the next candle. That's very likely going to happen. This high is going to get taken out, this current high, because there is no top wick there. So let's look at the H1. There is nothing. The M30. There is nothing. There is a flat top there. Could get taken out. The M15. Yeah, maybe this area here. That candle, we're gonna just keep our eyes on that candle. Okay, we've already tapped it. We already tapped that candle once and we made this huge drop, but we are going to pay attention to that candle. 440, 946, 6. Okay. Right. That's about 150 pips away. This is about 140 pips away. So we are in between them. Yeah. Price could also react to this because that's a drop and a base. No, it can't. There's no leg out there. Okay, so these are the areas that we're going to keep an eye on. Also here, yeah, if you get this candle here, 072482, 072482. That's a 50 odd, it's a 55 pip zone. That's a 48 pip zone. So we're going to watch those areas to see what price does when it gets there. Okay, that's a liquidity grab. That candle is important. That started the move down. Okay, so we're going to pay attention to if price gets somewhere there. I doubt it will, but we're going to just draw them and leave them and see what price does over the next 2.5 hours. That's my trading. That's going to be my trading time for today. So I'll wait for about an 2 hours, 2.5 hours from now and see what price does. If it gets to any one of these areas, this, or this further down, these levels down, we're going to see if we have a trading opportunity. We might not, because it's the last day of the month. Also, the first day of the week, it's a Monday, things are very slow. So generally, I don't really take trades on Mondays, and I don't really take too many trades on Fridays either, because it's the beginning and the end of the week, you know. So this is we're just starting. So we've already pushed 315 pips. I don't know how much of volume is already left. We're going to take a look at that. We're going to take at what happened in Asian and London session very soon, just to have context to our session today. So that was the trade that we missed on Friday. That's a 44 pip wick. Price came, grabbed liquidity from that candle and pushed all the way down. Couldn't come back up. If you look at the 5-minute time frame, yeah, it failed to come back even to that supply zone. If you look at the 1-minute time frame, it failed to get up here to that area. You know, it failed to get up to that supply area. Okay, that's fine, right? So that wick is kind of important, and so is this wick down here. So if you go down to the M5, price kind of, there is a supply zone there, drop, base, drop, and price kind of failed to come back up after it moved. That's the open of the candle, 159, and this high is 154. Yeah, so this candle failed to come back up and just continued to drop from here, 142 pips. Tried to come back up again to that high, couldn't again, failed, and dropped another. Dropped another 260 pips. Okay, so so for the reasons that I just mentioned, let's just go to the H4. It's, I think, better on the H4. All right. So today the plan is to watch these areas. These two areas. These are the extremes when it comes to buying, and these are the extremes when it comes to selling. Again, the system that I'm showing here is about trading at the extremes. Okay, I'm a pullback trader. I'm waiting for price to come to me. I draw the zones, you know, about 25-30 minutes prior to the NY Open. It takes about 20-25 minutes of prep work, sometimes even longer, maybe about 30 minutes of prep work. That's how long it takes. I draw my zones, and then I just wait for price to come to me. It comes to me, and I get an opportunity to take a trade. If it doesn't, I do the same thing the next day. Okay, that's what it is. Okay, so the first 15-minute candles has closed. Price broke two highs. Yeah, we should come down. We should continue to come down here. Yeah, we touched here. We should come down here now. We should touch 2637.25 very easily. We're coming down. We should touch this. Maybe another 10-15 pips to go. And then we should come back to this green area. And yeah, almost there. Yeah, and then we should break this low. Price should break this low, so it should drop about 30 pips. It might have a bit of a pullback, but price should drop about 30 pips and come to this candle low and take out this low, right? This low. This low has no bottom wick, so we're coming down there. So price may not go up; it might come down instead, and we want to see whether we'll have any buying opportunities later today, right? We are also creating M30 resistance here. As the close of this candle, the M30 candle closes in 8 minutes. Yeah, so as I said, we've touched 2637.25. Then we should come to the low of this 1-minute candle, which is this low is 263,490. So let's say around 2635. We should come to 2635, right? 2635 is about 25 pips from now, so we should come there. Anyway, so all of these things that I mentioned, right? This is basically reading price, reading what the candles are doing, right? There are opportunities here. There are opportunities to trade all of this, but that doesn't mean I take every trading opportunity. I don't, right? I can take just like how those exact same way that I draw the fib, I can take this trade, right? The stop loss of 9, 10 pips. We come down here, that's about 80, 90 pips. That's about a, whatever, 7-hour trade. But that's not the point. I don't want to, if I start doing this and chasing price, then I'm going against my trade plan. And my trade plan is to wait at these high liquidity zones. This is not a high liquidity zone. This is not a high liquidity zone. At least in my definition of a high liquidity zone, this is not a high liquidity zone, an HLZ as per my definition. So my definition of a HLZ is what you have seen me do time and time again, right? These are high liquidity zones. So I have to wait at those areas for a reaction, right? Not here. Even though there is a winning trade here, there'll be winning trades anywhere or everywhere on the chart. That doesn't mean all those trades are my trades. I don't have to take those trades. Um, I have a certain, a checklist that, has to be met for me to take a trade. So the, the number one thing on the checklist is price needs to come to a high liquidity zone. So it hasn't come to a high liquidity zone yet. Okay. Now, we've been pushing down since London session this morning. So I am expecting some sort of a reaction at this H4 wick here. This wick, H4 wick, is about a 70 pip wick. I am expecting some sort of a reaction, and this light green box is inside that wick. Okay. So that's what I'm anticipating, some sort of reaction. It might not be a reversal, it might just be a pullback, but I want to see if that pullback gives me a decent RR, and then I will look for an opportunity to take that trade. Yeah. Okay. So we should break below this low here. Yeah, 2635, right? We should reach 2635 very comfortably. It's about 26 pips away. We should get there. Okay. Now we wait. Now, just want to re-look at this area once more. This candle. That candle. Okay. The high 334, 63, 638, 334. Look at the 15-minute, what that looks like. Yeah, perfect. That candle, that's a very interesting candle, right? 67. This candle tapped into this area. This candle tapped into this wick, but this candle pushed all the way up, right? So this, we are about 40 pips away from this area. I'm gonna keep pay attention, very close attention. This is about a 67 pip range. I'm gonna pay attention to that area, what price does. Okay, so this candle here on the M30, let me show you guys. That's the M30 candle. This is the candle that started this big move up, right? 370. We went higher. Yeah, we went a lot higher. So this candle is the one that started the move, a 585 pip move up. All started by this candle. This was the push up, right? So we're going to look what price does when we get there. Okay, just go down to the M15. Maybe draw this one, this one. Hmm. Double 34 638. Okay. Yeah, about a 30 pip. If we get here, it's about a 30 pip stop loss. That's right inside that high liquidity zone. I'm gonna pay close attention to that area when price gets down there. Now, in that, you should find a demand zone. Yeah, perfect. So that's a demand zone there. That's a rally, that's a base, and that's a rally. So there is there at around 2629, then around 2628.50, right? Perfect. If you go down to the M1, yeah, we should maybe here. Okay. So we're gonna pay attention to those areas, see what price does. 2629.11, 2629.11, and close 2845. 28. Okay. 35. So as you guys have shown you guys before, this is a free tool that you can use to calculate risk that I use, or if you are in the group, then you can use this. If you're in the group, you can use this Excel file. It tells you for the right account size what should be your lot size, right? It's a fixed, it's based on fixed lot size. Okay. If you're in the group, that's what you can use. But if you're not, then you can use this. So let's say, for example, I'm willing to risk, let's say on this about I'm willing to lose about $18 on this trade, and I have about a roughly about a 35 pip stop loss, and then it tells me I can take a maximum lot size of about 0.05. Okay, roughly that's what I can do. And if I'm willing to risk, let's say $20, then I can take about 0.06, right? So you can swap this with risk. Then that means I'm risking about 0.9% of my account. If I swap with money, that's about $20. If I risk about $18, that means I'm risking about 0.8% of my account, which is I'm comfortable losing about 0.8%. But we're going to manage risk. If the trade goes against me, then we're going to manage risk and try to lose less than 0.8 or basically less than 1%, right? We're going to try to lose less than 1%. Okay, so I've got my levels marked. That's the kind of area I'm waiting for price to come anywhere inside here. We are getting very close. We're about 40 pips away. We are coming to this low. Price should easily take out that low, as I said. Yeah, so this low is basically 2635. We should take this out very soon. We're about 20 pips. We came down we were about 12 pips away, and then we pulled back up. So it should come and break this now, and then probably in the next 10-15 minutes. But it's a Monday, so remember that things are a little bit slow, and we've been pushing down already. So we're coming down here to take out that low. Okay, now we wait. We are getting close. We're getting close to that area. I'm going to be watching the 15-minute time frame. That's my entry time frame, the 15-minute time frame. So ideally what I want to see is two lows to be taken out, right, before I start to look for a buying opportunity. So price has already taken out a low here. This candle took out that low, but we haven't touched the zone yet. Okay, we touched it prior to during the pre-NY session, right? But we haven't touched it yet here because we are pushing down. So I'm anticipating this low to be taken out and price to come further down and then maybe go up. Okay, either a pullback or a bit of a reaction of this level. That's what we're kind of anticipating. Okay, just for information, let's look at what the Asian session did. Okay, so this is the Asian and London session. This is the market open, right? So this was so this is the market open. This is the candle where market open, right? So we pushed up. So this is the Asian high, and this is the Asian low, right? So we have the Asian high here. You have the Asian low here. Then this is the London Open, roughly about there. That's the London Open. So that's the London high. So the London high couldn't get to the Asian high. It couldn't get to the Asian high. We traded below the Asian high and broke the Asian low, closed below the Asian low, and is continuing down to demand, right? This was the London low, roughly about there. That's the London low, and that's the London high, right? That's the London low, and that's the London high. High, London low. Asian low, Asian high, Asian low, London high, London low. Okay, so we broke close below the Asian low, and we're continuing down to this demand, right? And we're waiting to see if price comes deeper into this high liquidity zone to see if we can get a trading opportunity. So all of this has to happen in the first 2.5 hours of the NY Open, because that's my trading window. 2.5 to 3 hours, maybe I can push it to about 3 hours. But if it doesn't happen within the first 3 hours of the New York Open, then that's it. Then we come back tomorrow and I do the same thing, right? That's the process that I follow every day. Same setup, same analysis, and same steps. H4 supply demand zones, out of them which are high liquidity zones, and then we look for, in those high liquidity zones, are there any candles that are interesting, any candles that are out of place compared to the previous 4-5 candles, or the 4-5 candles after that. If a candle sticks out in that high liquidity zone, is there a candle, either a M30 candle or a M15 candle, maybe a M5 candle, but not too much M5, generally M30 or M5, M15. If you see a candle that sticks out, then mark that candle and see when price gets there, how is price going to react? And that's the kind of trade that you want to take. And then when price does react there and we get entry, then we draw support resistant levels like I usually do, and wait for price to close either above or below them to see where our target can be. But generally the target is always, if you get the final target of a trade is when price, if price comes to, if I get a buy trade at a H4 demand zone, then its target is basically the opposite H4 supply zone. That's basically it, right? But then in between that, you might find M30 resistance levels, M15 resistance levels that price can pause at. So you got to pay attention to M30 resistance, not too much to M15, but M30 resistance or M30 support is very important, because price does stop or react to those support resistance levels. Okay, so we are just a few pips away from 2635, like about 10 pips away. We are getting there just as anticipated. Yeah, we are about 10 pips away from it. This low should be taken out, and once this low taken out, price is going to come deeper. Yeah, we're about to take it out now. We're just about 6 pips away, right? Should push through, take that out, and then come further down. But price is very slow today. It is very slow because, as I said, the Asian session moved price down, Asian high to Asian low. We moved 187 pips. Then the London high to the London low, we moved another 120 pips, and this has been in between those hours between the New York Open and towards the end of the mid the second half of the London session. Price did move another 150 pips. I'm not too keen. I'm not too concerned about this move, right? I'm more. I, as I said, I pay more attention to moves that happen during high volume hours. So the first 2 to 3 hours of the Asian session is a high volume time. The first 2 to 3 hours of the London session is high volume time, right? Pre-NY time is high volume time, whereas you can see this move up. This is pre-NY, right? Then what's happening now? This is New York Open. Now price is pushing down during New York Open, and the next thing that we have from 45 minutes from now is the NYSE Open. So maybe price pushes down, and then NYSE maybe price kind of pushes back up again, right? We don't know. We're gonna have to wait and see. Yeah, so we're almost there. We're about 2-3 pips away from taking out 2635, 2 pips away. So that's the low. Yeah, we're almost there. Oh, 1 pip away, 1-2 pips away. It should take out in the next couple of candles. Should take out this low. Once it takes out this low, it should take out this low as well. All right. It should take out this 1 minute low, then take out the next low and continue down. Might just get a sudden push down here once it takes out that low. Yeah, so just watching this area. 2630, roughly 2630. That's the area we're watching. 2630 or 262950. That's the area that I'm watching. 262950, 2629. Yeah, so we closed below this support, so we should continue down, maybe make a top wick and continue down. So we're making a top wick before continuing down. We're close below this minor support level here. This minor support level on the M30, also on the H1. Yeah, so you can see how price reacted to this area here. 620. Six, seven, nine. Yeah. So price is, that's how you draw that support level. Now you can see it, how clearly visible it's on the H1. You can see how price, tapped it there, closed above, closed back below. It touched it here, then closed above. And then you can see how price, bounced right there, then closed above. Now it's kind of closing back below, right? If you go down to the M30, you'll see them perfectly on the M30 as well. If you go down to the M15, which is the time frame that I like to see, you can see the price closed below it. So we're heading down. Okay, we made a top wick, we grab liquidity from that is the resistance level, and we are continuing down, right? So as I said, I've said this over and over again, if you draw support resistance levels correctly, that's the key word, if you draw them correctly, then you will see them on at least 3 consecutive time frames. You'll see price bounce on them perfectly on at least 3 consecutive time frames. The key is to draw it correctly, right? So you can see it on H1, 30, M15, even on M5, you'll see it, how perfectly price bounced at it. We tried to close, we wicked, we went up, then this 5-minute candle closed below or closed in the gray area, and the next one continued down, right? And now this one is grabbing liquidity from it to continue down. If you go down to the M1, you can see how price went up, grab liquidity, this one closed back below in the gray, in this gray box, and the next one continued down, and we are coming down now. So we've tapped this low already. Now we should come down to this low, right, which is about 15 pips away. It should come down and break this low. Yeah, because on the M15, which is what is important right now, because this is NY Open, we are within the first 2 to 3 hours, first 3 hours of the NY Open. The M15 candle has closed below this support level. That's important, right? The M15 candle. We've got another 10 minutes for the M30 candle to close. So if the M30 candle closes below this or closes at this support level, then the next one should easily continue down. Yeah, so now we've had, this candle opened, this candle broke this low, this candle broke this low. So we got to wait for this candle to close. I got to wait for this candle to close. This is 1545. This low is 3507. 3507. 35. 3507. Okay. So this was the previous candle low right here. And 1, 2, 3, 4, 5. Yeah, within the first 5 minutes, price broke the low. Okay. This is the previous M15 candle low. Within the first 5 minutes, price broke the low. So we should come down. All right, we should come further down. So we got to wait for this M15 candle to close. The close of this M15 candle will also be the close of the 1 hour and the close of the 30-minute. So let's see how this 1 hour closes. The next 30-minute, yeah, this 30-minute. Depending on where this candle closes, and if the next candle doesn't break the low, then we can look to see if we have an opportunity. But I believe that the next M15 candle is going to break this current M15 candle low. So we're going to wait. We've got another 7 minutes for this candle to close. So I'll be back in a bit. We've got 7 minutes for this candle to close. Okay. Yeah, this candle has to close. Got 7 minutes for that. Okay, we got a minute for this candle to close. We are respecting this support and closing above it. The M30 is rejecting the the 1 hour is rejecting that area. So respecting the previous low. The M30 is going to close like that. There's no wick at the bottom. This high 934, 498, 4.98. We respected this low. The M30 closed like that. Let's see if we pull back here. 22. Yeah. Okay. $37.08. Close 36.06. Okay. Stop loss 34.98. Point 8. Ah, the hell. Close 708. 36, 24 pips. So, okay, the reason for this is this M15 candle 507 low 498. Okay, so this candle broke this low, touched into the zone. This candle broke this low, so drawn the fib on this candle. It's almost like an M15 engulfing candle. It is from this high liquidity zone, but it did not come deep into it. It respected this previous low. So if you look at the M30, this candle respected this low. If you look at the H1, this candle respected this low, broke the high, and we are going up. But again, price did not come, came close, did not come to our zone, right? That happens. Now we are pushing up, right? There's nothing much we can do. If price does not come to the area, then and it just continues up. We've pushed up about 40 pips, 43 pips already. We just opened, We broke soon as this was the open of the next M15 candle. Soon as it broke, it broke the high, and then just continued higher. All right, so there's nothing much you can do because I'm not looking to take breakouts. I'm looking for a pullback. I'm looking for a retest and then a trade. I'm looking for the retest. That's what I am. I'm looking no retest, no trade, right? I'm looking for the retest. I'm looking for price to retest this area that it's created now. It's created a demand zone, right? On the M15, you can see a demand zone being created there. On the M5, you can see a demand zone that's been created there. I'm looking for that, for price to come retest it and then push up, right? So push up at least until that resistance, right? This resistance that we've drawn here. So that resistance, I drew it here. You can see how it perfectly matches up. So that open is 357. Yeah. Yeah, this low 434. That's better. Low 490. Five seven. Okay. So price reacted to it here. Stop, reacted. Okay. Then it touched here, reacted here, made it a base, and pushed up from there. Came down, stopped right there. The next candle broke straight through, and came retested and came down. Right. So that is the next resistance. So price, you need to see if price is going to close above that resistance to continue higher, or it's going to come and get us entry. So we don't know what's going to happen, but there is resistance there, right? And then if you draw the next one, hmm. 5112. Okay, so that's basically the next one, right? These are the three resistant levels. These are the two resistant levels above current price, closest to current price, right? I mean, there are ones above there, but we don't need to get into that because that's already a high liquidity zone, so there's no need to get into that. Now let's see if price is coming down, is pulling back to get us entry. Um, and how we're going to manage risk is, well, that's a single M15 candle, so it's kind of difficult to manage risk on that single M15 candle. But yeah, maybe if we kind of start to break that low, I might look to manage risk. But let's see, we got to get entry first. I don't know if you're going to get entry. This seems like what it's probably doing something like what it did on Friday as well. Let's see. Price has to come down. Yeah, the next candle, this candle closes in 4 minutes. The next candle should break this low, right? I'm hoping that the next candle is going to be my entry candle. That the next candle breaks this low, gets us entry, and then we go up. So we're going to wait for this candle to close. The next candle, because this candle closes in about 4 minutes. If the next candle doesn't break the low, just respects that low and can continue up, that could happen too. If we close above this resistance here, then we continue all the way up, right? Price has to close above this resistance to go to this resistance. Okay, that has to happen. This resistance is about 120 pips away, 125 pips away, and then once it breaks that resistance, it should easily go and touch the supply, which is around 140 pips, and we should even go further up to about 170, 180 pips, right? So if you do get a buy, that's where we're looking to get out, around that area. But I don't know if you're gonna have a winning trade or we're gonna have a losing trade. That I don't know. But if we are gonna have a losing trade, I'm gonna manage risk. So I'm going to lose less than what I intended to lose, right? That's the plan. Less than what I intended to lose. Now the M30 candle has rejected that area. It's respected this low and rejected that area. So, and we have a M15 candle there. We have a M5 candle with no bottom wick. So price is going to come down here. The M15 closed above this. The M30 also closed above this support. M5 has no bottom wick. Yeah, and that is the start of that M5 candle on the M1 that has no bottom wick. So price should come down. Price should come down and take out that. Should come down. So that open is 605. Okay. Yeah, we came very close and we did push up again. Price has been toying with us the last couple of days, Thursday and Friday. This is exactly what's been happening. We come about 4 or 5 pips from entry and we just kind of go the opposite way. We don't get entry. So just want to see if today is going to be one of those days as well. But I'm going to wait patiently. That's the whole point of me trading like this, and I'm going to wait patiently for price to come to my area. Okay, so 2 minutes more for this candle to close. For this M15 candle to close. If it closes a doji, it's very likely going to come and touch. The next candle is going to come to this low. If it does come to this low, I will look to take a trade and anticipate price to go up. Oh, okay. That's better. Mm. we are closing a doji here. The next candle should come down to the low. Maybe it might respect the low and then go high, then go up. If it breaks the low, great, we can take a trade, but if it might just respect the low and then continue higher, that's possible too. This candle is going to close a doji here. 30 seconds more for the candle to close. So what's happening is price just didn't reach this yet. Yeah, 10 seconds more. Just want price to okay, so that's the candle close. So doji as expected. So we're anticipating price to come down now before it heads higher, right? Come down, create a bottom wick, and then go up. But if price continues to come down, then we're going to find a way to manage risk. That's a single M15 candle, so I might have to go down here. I mean, if price comes straight down, I might have to go down to the M5, right, and manage risk on that candle there. But if it closes somewhere here, then I have M15 candle to manage risk on. But price has to come down. It has to come down for this entry. It came quite close, 2.5 pips away, and then pushed up 23 pips. This price should come and break this low here, this flat bottom here. I just feel like price is going to come deeper. It's going to come deeper. I just feel we created resistance here on the M30, and price is reacting to that resistance, right? We are reacting to this right now. It's a minor level, but we are reacting to it. Just look to this left and see what price has done. It's the same, not much of a difference. Yeah, it is a minor level. The better level is up here. Yeah, the better level is up here. That's a minor level there. Price, if it's coming up, it should come up here. 30. Came really close. Really close, 2.6 pips away. Came really close. There's very little volume. This is where about 10 minutes to NYSE open. So price is just right now ranging. It usually does that. Not all the time, but majority of the time. We've had a NY move. We've had a pre-NY move, right? This is the pre-NY move. We moved about 100 pips. Then the NY move, we've moved about 100 pips, about 95 pips. And now we're ranging just below NYSE. So price could be just pulling back to continue further down. That's possible too. Pull back to continue further down, to this area, and then we get a trade. But because of the reason that I said, we are looking to take a trade here, ideally to this resistance area. If price pulls back here, get an opportunity deeper inside here to go up higher. We did grab liquidity. Ah, 43 pips. Yeah, but price is not coming down, refusing to come down right now. It's just pushing up. We did tap into this supply, this demand, drop, base, drop. This candle did tap into it. Here, right here, tapped into it. So, not sure if we're going to come down further, but we did tap into that. If you look on the M5, it's very clear. We have right there. That one right there. We tapped into it. This one. This open of this price, 774. This open of that candle, 774. And price did tap into it. See? And we are pushing up 21 pips. We pushed about 25 pips, in fact. Yeah. Try it again. Didn't come. Just unfortunate. Yeah, it's just unfortunate. We're pushing up now. Yeah. It's unfortunate. We're not coming. We're respecting this low. We're continuing higher. As soon as the candle closes here, the next one is going to pop up and go up straight up. There is a chance to take a trade here with a stop under there, 30 pips under that. Yeah, let's see where this 5-minute candle closes. If this 5-minute candle closes bullish like this, maybe stop loss goes under that and I take one, because we did tap into that drop, base, 1 2 3 4 5 base in candles, and the leg out. That's a rally. Drop, base, rally. This is the drop, this is the base, this is the rally, and price came and touched it perfectly, and we pushed up 30 odd pips. So I don't think we're coming back down. I think we're heading towards that. Depending on how this candle closes, I might just take a trade, a very small trade, stop under that 15-minute, because we shouldn't break this low again, right? We should just continue higher. So I'm gonna wait for this 5-minute candle to close. We'll wait for the 5-minute candle to close and then maybe take a trade here. Yeah. Yeah. If it closes here, where just the next candle is going to continue. This was the pullback. This was the pullback to the supply, to the demand zone to continue up. So I'm going to wait for 30 seconds for this candle to close. And then if it closes just like this, I'm going to take a buy trade. Stop is going to go under that, right? Under that candle. 745. 45. Yeah. Yeah. So I'm going to take a trade right there. Stop under that. If we come back low, I'll take another small position. Okay. Perfect. Yeah, we should, because we did come and tap into that. And yeah, we should continue higher. Three minutes for this candle to close. 5 minutes. Close 6-3. Okay. Let's see if we tap that. Yeah, tap that demand zone. That's a stop loss. In terms of managing risk, if price breaks this candle low, then I'm going to close. Then price is coming down, right? This M15 candle low closes the breaks the low 37.92. 37.92. Yeah, 2 minutes. Price should continue higher because if tapped into that demand, it should continue higher. I don't like this trade at all. I hate doing this. I absolutely hate. I prefer this because that is the tightest stop loss, and that's the pullback trade. I hate doing this thing. We came there, but we didn't get entry again. Prices just not coming towards our entry. Came close here. We missed this about 2.5 pips, and now we're about 2 minutes for this M15 candle to close. 88.90. Okay. A minute and a half. The next candle should wick this. So the 30-minute candle is going to close like this. Next candle should wick down and then go up. Minute more. We came very close. We touched it, but we didn't open because of the spread. So the next candle should come down and wick it. I'm going to manage risk right here. Okay, that's a 15-minute candle low. This candle is going to close now in the next 30 seconds. So I'm going to manage risk here. If we come down there, that's about 30 pips. We're going to manage risk at that candle there. It shouldn't break this candle low. It should continue higher. It's a minor resistance. We should continue up to this resistance here. And if you do continue up here, then partial positions would close, because partial positions is at about 20 pips. So we should close partial positions. And then if we have volume continue up here to this area, to this resistance here, that's the plan. 2650 price push back to 2650, right? Come up here on the daily, we come back up to this resistance here, 2650. And that's exactly where the resistance that we've drawn at, right? It's right there. So come down, maybe get us entry. No, yes, we got entry. Yes, we did. Now we got to push up. Got to push up. So that's the M30 candle. That's how it closed. M15 is there. 5, yeah. Let's see if we can push up to this resistance right here. Let's see if price can push up right there. If it comes down, it should break this high. Price needs to break this M15 candle high, right? It needs to break this high. Ideally break the M30 high as well. It should break this high here. If it doesn't and comes down, then we're going to manage risk right here at this candle. So that's about 17 pips, 16 pips. Let's see. We got to break this high in the first 5 minutes. We're going to break this high, and we should continue higher. 137, and this is 119. No, struggling. Yeah, we come down, I'm going to manage risk when it comes down, because this is a flat bottom here. So if we break this low, then we're coming straight down, and we're coming down here. I'm not going to hold my trade. Yeah, we're coming down. We couldn't break the high. Tried, but we couldn't. So we are coming down now. I'm going to manage risk. I'm going to close the top position as soon as we touch that. So this is the NYSE open, right? So price seems to be trying to push down, go further down. This was probably the pullback. So price kind of pulled back. So price probably is trying to continue lower. That's probably what's happening, right? So we kind of on on the M15, uh, the NY pushed down during NY open, then we kind of pulled back a little bit until NYSC. And now maybe price is either try to continue down. So if we break this low, then we're continuing down. So there's no reason to hold these trades if price is going to continue down, right? If you break this low, then we're coming down to this candle. So there's no reason to hold these trades up here. We have to break the high to continue. We have to break this M15 high to continue higher. If we don't and we break the low, then we're coming straight down. And then we're going to close both these trades. There's no reason to hold them. It's very likely that we're going to come down. We are pushing down. Yeah. Yeah, we're pushing down. I'm gonna just manage risk right at that stop loss. Yeah, there we go. It's the first. Yeah, let's close both. We're not gonna hold. So we got a 0.4% loss there. And price is pushing down. Price is pushing down. Yeah, price is pushing down. Probably gonna fill this wick. Yeah. Yeah, we're gonna continue down. We're gonna continue down. I am gonna keep this house as a flat bottom. So we did take out that low. Yeah, so I'm going to delete these pending orders because if this M15 candle closes a bearish candle and the next one breaks the low, then we are continuing down. Right? So I'm going to wait for this M15 candle to close. I'm not going to keep any pending orders open. I'm not going to do anything right now. I want to wait to see how this M15 candle is going to close. If it closes bearish and the next one breaks a low, then we're coming straight down. We're coming down to this lighter green box. Okay, and we're going to just patiently wait to see what price does. Price to go up, this candle needed to break the high. It didn't break the high, it broke the low. So when it breaks the low, that means it's coming to this low, and if it has come to this low, then we've got a clean drop here, down here. So there's no reason to hold that trade. There's no reason to increase the stop loss. There's neither, because price is coming down, right? It's the logical move. We didn't break the high, we broke the low, so we're coming down. So that's exactly what's happening. Now we've broken this low, it's broken its own low. Now it's going to break this low, and once it breaks this low, it's going to come straight down into this range. right? So if you go down to the smaller time frame, there is no bottom wick there. So that's exactly where price is coming down to. Okay, so there is absolutely no need to hold a trade there. So we're going to wait for 5 minutes to see where this candle closes. See, there is no bottom wick there either. There's no bottom wick there. Yeah, we're coming down, coming down, coming down. So we've drawn support resistance correctly. So price did close above it. Now if this M15 candle closes at this gray box, then the next candle is going to continue down, because make a top wick and continue down, and we're going to wait. We're going to patiently wait for price to come into this area, the green area, right? We're going to do anything. But price needs to close either at this gray area, the support level that we drew, that's there on the M30, on the M15. So it tried twice, it couldn't. Third time, if we close here, the next 15-minute candle closes here or closes below, then we're coming down. Yeah, I don't see a sign of price pushing up. Price is just pushing down here. Okay, we got bearish volume right now. Yeah, we got bearish volume. We're coming down. So the NY session pulled down, NY open, pulled back up, and this is the NYSE volume. So NYSE volume is pushing down. We're coming down. We're coming down. We should come down maybe another 60 pips. Should come down. We're going to break this low and break that low, break this low, break that low, and come further down. Maybe about here. Another 60, 65 pips. We did tap here. Can we see an M16? Can I see an M1 candle close strong bullish from this support? Yeah, we do have one, but we are coming back down again. Yeah, we're coming down. Just gotta wait for this M15 candle to close. 2.5 minutes more. Gotta wait for this M15 candle to close. If it closes at this support, we're going to continue down. The next candle is going to break the low and continue down. And also that's the next 15 minute is going to be the 4-hour candle close. Yeah, we're coming down. Yeah, there we go. Perfect. We broke the low. Yeah, we broke the low. There's no need of that. We broke this low. We broke this low. Coming down. Okay. That's the NYSE volume. It's basically this candle. That's the candle. This candle, this high is 933, this high is 934, this high broke this high, this high broke this high, this high broke this high, this high was respected, price came to sniper, 12, 13 pip stop loss, and it's dropping. It should drop down here, maybe 100 pips. 100, 125 pips should drop further down. Yeah, so it's just bearish volume today. And price did not come back to our area of interest to take a sell trade. There are sell opportunities here from these from these resistance levels, but I don't trade in the middle of a range. I always wait for high liquidity zone. That's why we waited here for a trade, but there was no clear, I mean, there was no winning trade there, so we managed risk and we lost 0.4%. So instead of losing 1%, we lost 0.4%, right? Now price is coming down, so we're going to see where this this 15-minute candle. Um, yeah. So the next 15-minute candle broke the low, so you got to wait for this 15-minute candle to close now, right? I got to wait for this 15-minute candle to close because this broke the low, right? Immediately in the first minute, the first second, this was the open of the candle, broke the low, previous 15-minute low. So you got to wait now for this 15-minute candle to close. This 15-minute candle most likely will make a top wick and then continue down. Okay, so you got to wait 15 minutes now. I got to wait 15 minutes for this candle to close to see if this candle is going to grab liquidity from this area, right? If it's going to grab liquidity. If it does, then I'm going to draw the fib based on this M15 candle and then look for a trade. That's it. That's all it is, right? Just like we did here. So we came to our green area. This is a kind of a bullish engulfing candle. So that's why we drew the 15-minute off that, because it grabbed liquidity from this green high liquidity zone. But then it was not meant to be. Price came down. I managed risk beautifully and lost 0.4%. As opposed to as opposed to 1%, I lost 0.4%. So now, since this candle, this new M15 candle, in the first minute it broke this, or in the first 5 minutes it broke this low, the previous M15 low, I'm going to wait for this M15 candle to close. Once it closes, we're going to see what kind of candle it is, if it has a big liquidity wick or not, and then I'm going to draw an M50. I'm going to draw the fib based on that candle and look for another buying opportunity. Okay, so we've got about 13 minutes for the candle to close. I'm going to wait until then, and I'll be back in about 10 minutes. Okay, so we got about about 4 minutes for this candle to for the 4-hour candle to close. It is rejecting this area. It's not come deeper, but that's fine. It's come very close. If this 15-minute candle closes like this, that means we are rejecting this area, and then that's a possibility for another to give this idea a second chance, right? But it's got to close like this. It's got to close strong bullish, pushing up from this light green zone that we had drawn, right? And this, if you remember, this light green zone, if you look back at the beginning of the video, we had drawn this prior to the New York Open. This light green area is based off this green candle here, this M15 green candle, right? That's the light green area. It's based off that. So gotta wait for this candle to close, and then so got about 2.5 minutes more. Gonna wait for this candle to close. That's also the close of the 4-hour candle, and then wait to see if we can pull back and then push up, right? Just get ready right here. So 751 057 7 766. Okay. Right. So yeah, that looks okay. Two, four. Eight. So we are pushing up to reach this resistance. So we closed below where this candle is closing back above this support, right? Which is a good sign. So if it closes above the support, the next candle should go, or the candle after that should go and reach this resistance. So that's the kind of trade that we're looking for. So 839, that's the high. Right, so the candle is about to close in about 30 seconds. Perfect. Okay. Hopefully this candle leaves a bit of a top wick and doesn't close without a top wick. Yeah, because we want a range to trade. So yeah, 40. So that's a 4-hour close, right? The 1-hour has pushed up from there. The 15-minute closed below the resistance. Yeah, that's a little bit tricky. Open 371. Yeah, got entry there. $29 pips. Yeah, so price did come right there. 234. 263057. 26. Okay. If this continues to come down and stop us out, then that's it. That's the yeah, it is. Seems like it's coming down. Manage risk. No candle to manage risk because prices. There's no M15 candle to manage risk on. That's okay. I've taken a very small position, so I'm gonna. Yeah. So 17. Yeah, in the first 5 minutes we broke the low. Okay. Price did close below this. I mean, it should have closed and above. I should have waited for a candle to close above this resistance to take the trade. But anyway, we did when we lost a very we lost another 0.4%, which is fine. It's all within my. I'm willing to lose 1 to 2% per day. So I'm gonna wait for this M15 candle to close now. Yeah, I'll be here for another 30 minutes. Gonna wait for this M15 candle to close. And price ideally needs to close above this resistance. If it does close above this resistance, we are pushing up. This candle didn't, so that was a bit of a mistake trying to open a trade on a candle that did not close above. If this candle was in the last second, we closed below. So this candle 17. So yeah, so this is the previous candle close. We were up above. In the last second we closed below, and I took the trade here, right? Yeah, so as soon as this closed below, that means this M15 candle is not going to, the next one is not going to push up, right? We have closing below this resistance level. That's why it's so important to draw these SR levels correctly. So you can see that it bounced here, we bounced here, and now we closed below for price to push further down. So I'm going to wait now for this M15 candle to close, and then see whether there is one more opportunity, just one more. I'm going to give my trade one more chance if this candle closes the way I want it to, right? If it creates a wick, this one or the next candle creates a liquidity wick and closes, then I'm going to look for opportunity, right? So maybe not this M15 candle, maybe the next one. So I'll be here for another 30 minutes. I'm gonna wait for this M15 candle to close. Okay, I'll be back in about 5 minutes. All right, so the new candle opened and it broke this low immediately, right? So this 1715 and this low is 29.29. Low, low, yeah. So yeah, within the first 5 minutes, we broke the low. So like I said, now I'm going to wait for this M15 candle to close. We broke the low. I want to wait for this M15 candle to close. If this M15 candle doesn't close um, with the liquidity wick, then that's it. Then I'm done trying to look for any trades for today. So this is the last 15-minute candle that I'm going to wait for, and that will also be, so if it doesn't close with a liquidity wick, we have tapped into this green area that these green lines that we saw. Okay, so also, so let me just, it did tap into that. We had marked it with a stop loss here. Five, 45. Yeah, it did tap into that. The stop loss, I mean, that's what we had drawn. Price is pushing up from it. Yeah, just one of those days. It's a little too late to the chart, and price did react from it. There was a perfect 3 rejections on the M1. Um, okay, 2638. Yeah, unfortunate. This is what I kind of look for, a rejection of that level. So that is, we got that, and I wasn't at the chart to take the trade. Yeah, so that is, we broke the low, but we tapped into that and we're pushing up. So we had marked these 2 green lines just before the session started, and we were waiting for price to get into that candle, which it did, right? I don't know whether it'll come back. I doubt it'll come back again now. I think that's it. That's a tap, and we're going up. Yeah, it's unfortunate. It's too much of a stop loss to take. 27 pips. Yeah, price came. I wasn't at the chart. And tapped this green line and pushed up 40 pips. 26 pips stop loss. 40 pips. We're going higher. We should head here. 70 pips. I missed this trade by just not being at the chart. That's okay. That's okay. Yeah, so this M15 candle um, came close. The next one tapped it and went up. Yeah, so we got resistance there, and 3078. Yeah, yeah, it just doesn't seem to allow us to getting on a trade today. Um, yeah, that's fine. I think I'm gonna. Yeah, it's unlikely price is coming back. We tap this support. We tap this support here. We're closing above. Um, if this candle closes above, the next one should continue higher. This support is drawn here, so just like I drew it now, you can see that if you look left, how price tapped that area perfectly, right? So we tried to close above, this one closed below, the next one closes above, then we're going to this support, this resistance here, right? This is a support level, M15 support level. You'll see it on the M30 as well. Um, you can see it on the M30 as well perfectly here, right? So yeah, just unfortunate. It's unfortunate. It's a Monday. It's just um, searching for liquidity. Yeah, this 30-minute needs to close above. This 15-minute needs to close above this support. Okay, it's almost 3 hours since we started the stream. So I'm going to probably end this in the next couple of minutes. Okay, so again, we did the analysis, drew a high liquidity zones. Price did come to the high liquidity zone. Took a couple of trades. We managed risk. They went against me. I managed risk, so got out. I lost less than what I intended to lose. And now it's coming back here to this level that we had marked. It's reacting off this level. Price has already pushed about 50 pips. So I'm not sure if price is gonna come down, but if it does continue to come down, I'll manage risk around this M15 candle here. There's M15, this M15 low. I'll manage risk at that M15 low. Okay, right. So this M15, yeah, we closed right at that. We should continue high. We should make a bottom. We can continue high. Okay. Um, can we pull down to get an entry? 15-minute, 30-minute candle has closed, rejecting that area. 15-minute candle has closed like that. 430892. Okay, so anticipating price to come up here, right? That's about 50 pips. So got a stop loss of about 18 pips. Come up about 50 pips here. And then if you close above this resistance, we go to the next resistance, which is about 125 pips, 130 pips away, right? That's the plan. So we pushed up, we touched this green, like we had drawn. We had drawn this right at the beginning of the session, 2629.11, and it tapped it. I wasn't here to take entry right here. This would have been the ideal entry, but I wasn't here. If I did, I would have been about 50-60 pips in profit right now. But price did go above, broke the previous M15 high. Now it should respect this low. If you broke the high, there's no reason for it to come down. So if you come down, then that's it. We're closing everything, right? There's no need because it's broken the high already. It's got about 7.5 minutes for the candle to close. If you break the low, that means this trade is invalid, the setup is invalid, and we're done. Okay. So the point is for price to now continue higher. We've gone about, yeah. So we pushed up about 38 pips from entry. The M15, previous M15 closed just above that support, which is great. This should close above the support too to continue to this, right? That's the idea. For price to head to this support. Okay. If price gets to this, then I'm going to end the stream, and because partial positions should close somewhere here, yeah, around here partial positions should close. So if it gets up here, partial positions close. So gonna uh, let them close and let the rest of the position be open, and I'm going to end the stream. And later on, we can see tomorrow what price did. If price did go further up, or if it came and kind of stopped me out. Okay, so because it's been over 3 hours already. Yeah. This candle closes a strong bullish candle. The next one should break the high and continue higher. And yeah, that's about it. Open 2640. 2640. And then open 2643. Okay. Yeah. $30.60. That's the M15 low. So if I close both my trades there, then both these trades, the positions are closing at break even, right? We moved up 40 pips, and if I close it there, then they're closing at break even, which is very likely what's going to happen. We're coming right down. It's a lot of bearish volume, and price is not kind of willing to push up today. So push down in NY, pull back up, we push down in NYSE, 120 pips. NY push down 92, just push down another one, 125. So we're continuing to, seems like we're continuing to push down. $15 seconds for this candle to close. Price to head up to this resistance, the next candle has to break the high. If it doesn't, then we're coming straight down. We break this low and we're coming down. If it breaks a low, we're coming down further. So it's got to break the high. This high is 34.77. Yeah, okay. If we broke the high, we should head up. Should have a head up to this resistance. It's clean space there, so we should head up. Yeah, so now there is no reason for price to break this M15 low. Maybe it'll come down for a bottom wick, but there's no reason for it to break the low. So yeah, can put a stop loss can go right below that. Okay, so Partial position should have closed as price needed to come another 2 pips. Partial positions to close. So this candle rested on this support. This one 2 pushed up, this one closed below, didn't break the high, closed below. This one closed back above this support, this one closed above the support, and should continue up. Technically should go up. Yeah, should go up, but there's no bottom wick, so maybe we're coming down now. There's no bottom wick here. It's slow. It's a Monday, so it's slow. Okay, partial positions closed on both. So now I'm going to put my stop loss under here. I'm going to close my pending orders. Put the stop loss under here, which is now a break-even trade, just 2 pips under the just 2 pips under the entry. And we're going to let this see if this runs. If it runs here, it's about 90 pips. If it runs here, it's about 123 pips. Okay. So that partial position recovered half of the loss. So I took 2 losses, and half of my win, just half of my win, recovered 50% of both losses. Right? So we had lost 0.8%. Now we are back to 0.4%. If I close the trade now, then it's a break-even day. But we're going to see if this trade is going to run, because our stops are going to put the stops at break-even and see if this trade is going to run up here or here. Right? So 3060, the low is, this low is 3060. All right, that's it. That's the end of the session. Okay, we come back tomorrow, and we're going to see if price pushed up here, because on M15 we have a wick here, on M5 we have a strong wick here rejecting this area. But if an M15 candle closes above this resistance, we are continuing higher here, right? And this area is M30 resistance. You can see resistance right there. M30, there's a bullish candle and a bearish candle close here. So my TP is put right under that resistance, right? That is the first TP level, 2640, and the next one is at 2643, right, at the next resistance level. Okay, so we're going to see if price can get up there. It's about 40 pips away. See if price can get up there. We're going to leave it at this. Stop loss is going to be under this M30, current M30 candle that's still open. It's under the M15 candle. So price has broken this high. There is no reason for price to break the low. If it breaks the low, it's coming further down, and it's probably going to break this low. So there is no reason to hold a trade once this low is broken. I don't need to take another additional 15, 16 pip stop loss once this low is broken. So I can put my stop loss just under this candle, if that makes sense, right? I'll repeat that. The high is broken. Price has already broken the candle high. So there is no reason, this candle has no reason to break this candle low. If it breaks the low, then it's coming into this range, this candle's range, because it's traded down, broken, come into this range and broken the low. If it breaks this low, it's going to come into this candle's range, right? So if it comes into this candle range, that means I'm going to be holding a trade with a 15 for about 16 to 18 pip stop loss. And that's completely unnecessary when I've already had the close partial positions here. So the best thing to do is put the stop loss under this candle, right? And see if it gets hit, it gets hit. I take a very 5 pip loss, and I come back tomorrow. Okay. Right. So that's the end of the stream. I'll be back here tomorrow to do the exact same thing. We'll do our analysis on the H4, look for our high liquidity zones, and then wait for price to get into those zones to take trades, just like we did today. All right. See you guys. See you tomorrow.